What if I told you that a failed breakout could lead to a 20% gain in just a few weeks? Sounds too good to be true, right? Well, that's exactly what happened with our recent swing trade in Arista Networks. And today, we're going to show you just how we did it. Picture this. You watch a stock breakout only to see it plummet days later. The market is littered with discouraged traders, their hopes dashed. But what if I told you these failures can actually be hidden gold mines? Welcome to a powerful swing trading strategy guide that will revolutionize how you view false breakouts. We're about to reveal the exact technique behind our current 20% gain in ANET stock, showing you how to turn market disappointments into potential profit machines. You'll get a front row seat to our entire process, from spotting the failed breakout to timing your entry for maximum returns. Stay tuned for a crucial bonus tip at the end, where we'll show you a simple yet powerful strategy to manage your trade if you're caught in a failed breakout. This psychological hack could save you from panic selling and preserve your trading confidence when you need it most. I'm Darren Wagner, founder of Morpheus Trading Group, and today we're joined by our head stock analyst, Rick Petticelli. With over 20 years of swing trading experience, Rick will walk you through our potent false breakout strategy. If you're ready to learn how to profit from false breakouts and take your trading to the next level, press the like button and subscribe now. Your trading account will thank you later. Now, get ready to master the art of turning failed breakouts into powerful profit opportunities. Let's get started.
Okay, before we get into how to trade the false breakout setup, first we must identify what a false breakout is. So what we're looking at generally is just a move out from several weeks of sideways action, at least 3 to 4 weeks, and you have a breakout, and then you have a move back into that base. So underneath, it undercuts the base high. So if this is the base high, here you have the breakout, and there's a pullback back into the base high. Now, if we really want to define what the false breakout is exactly, is you have the day that the stock breaks out above the base high, which is right here, the low of that day, if that low is broken, you have a failed breakout, all right? So, and generally speaking, we want to see these false breakouts occur within a few days. We're not talking about false breakouts that happen where the stock goes up for 2 to 3 weeks and then pulls right back. That's just more of a pullback trade. We're looking for breakouts that fail within, maybe 5 to 7 days tops. So for example, in ANET, we have the breakout above the obvious high, and then we have an attempt to move out, and then there's a failure here. And this is about as, let me see it, so like 1, 2, 3, 4, 5, 6, 7, 8. So that's about as long as we want to see in a false breakout setup. But you have the price action undercut the low of the breakout day. So this is officially a failed breakout. And, the reason why they occur, I think it's just an obvious entry, and sometimes the stock's just not ready to go. And you have your late to the party buyers, and they'll be the first to exit and want to get out. Those who bought a little bit lower can sit through some of this, pullback, the shakeout. They have a lower entry price and can ride it out a bit. But most newer traders, when they're first learning how to buy breakouts, it's a pretty easy thing. You spot the move to new highs and you enter and you hope there's enough follow through. So when the price fails to move out, goes lower, triggers some stops, and I think that just builds on itself and snowballs, and you have the price action sell off for 2 to 5 days most of the time. And so when I first started trading and getting into breakouts, you learn pretty quick that you're going to see a lot of false breakouts unless the market's really just ripping and it's the beginning of a new bull and everything's just moving. You're going to get some false breakouts. And actually, we prefer to buy patterns that already have a false breakout in place. And most of the time, it's not going to be as dramatic as this false breakout here. It's just going to be maybe a more along something like this right here, where there was a push out, maybe even one day, and then it's a one-day breakout attempt. The next day pulls right back into the range. So that's what we'll see a majority of the time. It's not over 5 to 8 days. It might just be 1 or 2 bars. We like to see 1 or 2 of those already in the base. That way, there's higher odds that maybe this next breakout will work. So we love to see false breakouts in the base. That gives us more confidence. And so generally what happens, you new traders, they buy these breakouts, they pull back in, trader gets stopped out, the price action bottoms out, within a few days rips higher and takes off. And if he or she is a new trader, what they tend to do with false breakouts is, they'll possibly ride it out as long as they can, stop out, only see the price action reverse higher and take off. When you're new to trading, you might be a deer in headlights when that price action rips higher, as you were just stopped out and you feel like you can't just get right back in. But the longer you trade, the more you realize that that's just part of the game and you have to re-enter. Your entry didn't work. Tough luck. Is the setup still valid? Yes. Okay, then buy back. And as you gain more experience in trading, you'll probably want to develop a rule that limits the number of false breakouts you can attempt, how many times you can re-enter, be it 2 or 3 times. You really don't want to keep on trying to get in that stock that's failing, because if it's more than 3 times, it's messing around too much and there might be better setups out there. And again, so the psychology, the reason why we like these the false breakout and with the shakeout entry is that the stock does reverse higher. There's good odds that it's going to take off, and many will just pass on it. And for those who are washed out and their stop was hit, they'll have to rebuy at a higher price, so it creates more demand on the move up, especially if it's had a few shakeouts along the way. So let's go through the ANET setup in detail. First up, we had the breakout, and then we have this false breakout with this pullback here. Now, generally speaking, we like to see more of a gentle false breakout with maybe one wider range day that shakes out of the longs. And this gap down here is pretty, from the high of the prior day to the low of this day here. That's a 10% sell off. So that's pretty volatile. And that's not something we're going to look to trade, as that price action probably reversed sharply off that's the 10-week moving average right here. And so if we were to enter, say, over the high of that day, we're looking at a 6% stop. And given the recent volatility, we don't even know if it'll hold up here. So that's not something we're looking to enter on the next day. And like I said before, it's a bit too volatile. So if the setup right here is looking too volatile for us, too sharp of a pullback, you have this downtrend line here that it's going to have to take out. Let me draw a better downtrend line than that. So it's going to have to take out that downtrend line as well. So as the days progress, there's really nothing to do here. The price action did for a moment try to push through the prior swing, the prior high and the downtrend line and reclaim the 8 MA, but it pulled right back from there. So still not much of a setup until it pulls back into the 20 here and holds. That could be something. So maybe a push through this 309 area here, the high of May 30th, that could be in play. But the price sells off, and the next day sells off, and the next day's down, and then we have a bit of a bounce to the 20 and the 8-day EMA and the downtrend line, and then there's a pullback, and the price action hasn't yet touched the 50 MA, but it bounced off the 10-week MA once here, and it's set a higher low in here. So right around this area here, you can see that the price action has tightened up quite a bit. We go from being 12% wide right there to 3.5%, 4% wide right here. So on June 10th, we note the bullish reversal action. We see the touch of the 10-week MA. This is the 10-week moving average on a daily chart. That's a pretty cool feature of the TradingView charting platform. And the price is just above the 50-day MA in red. So we see the little bit of reversal candle. We see the 8 and 20-day EMAs just above. And we have this trend line in place with several touches, 1, 2, 3 touches. So on the 11th, we place a buy stop above the high of June 10th, which is also above the downtrend line and the 8 and 20-day EMAs, and it triggers. Now, depending on how aggressive you want to be with stop placement, the stop can be either this day's low, or the swing low down here beneath this low, which is where we placed our stop. When market conditions aren't ideal, sometimes it's tough to go with these really tight stops, because I've seen it where the price will just pull back in, undercut this low, and then take off again. I guess it really just depends on the type of trader you are, if you're comfortable with setting those tight stops and just re-entering. But our stop was beneath the 289 level here. And from our entry, the price took off pretty much right away, and then gapped up on June 13th and paused and pushed higher. We took some off the table for about a 9% gain on the 13th. We also took some more off on the 21st for a 15% gain, and we continue to hold ANET with a 20% gain on partial size, and we'll continue to hold it as long as the price is able to stay above this 8-day EMA. Now, I wanted to point something out with regard to this pullback setup at ANET. This is more of a pullback reset because you have several weeks down, you have higher lows in place, and then the price action moves out. On many false breakouts, you might just have 2 to 5 days, and rather than 3 to 4 weeks, that's what we see more of. And I'd like to show you a few examples of false breakouts that are more the 2 to 5 day and that are not as deep as ANET, where ANET's pulling back to the 50 MA. Some of these will be off the 8 or the 20. HIMS had a few recent breakouts that we can look at that I find interesting. So here's the breakout above the base high, and then a pullback to the 8 and the 20. That's a shakeout. Again, that's more of a violent one-day shakeout, and that might not be something you want to play, but depends on your style of trading and how comfortable you are with trading this sort of volatility. However, a few days later, we have another false breakout, really, and then we have more of a constructive pullback. Yes, there's a shakeout here, but it's not. The volatility isn't as high here as it was on this day. So you have a few days of sideways action holding up at the 20, and that's where you can get in here. And of course, though, there's earnings here, so this is probably something I'm not going to play heading into earnings, but you can see that this is the type of false breakout that we look for. Off the 20 here, and this is just a 3 to 4 day pullback, 5 day pullback, and then a few days sideways. And there's another false breakout in HIMS later on. Again, this is more of a normal shakeout that we see. Just undercut the low of this breakout day and held at the 8 and then pushed higher. Now, how do you know to buy at the 8 and not the 20 or the 50? As I mentioned before, volatility is going to play a big factor there. If it's a volatile pullback, you might want to wait. But other than that, you want to let the price action dictate what to do. I don't know if the 8-day will contain this false breakout, but if there's a bit of a shakeout here beneath that May 20 low, and the next day the price action bounces off that low and takes out the prior day's high, that might be a pretty decent shot to enter with the fairly tight stop here, or even enter the next day with the stop beneath this low here, just going with the price action. And it could be where it triggers and then stops you out, but then finds support at the 20, you might have to take another shot there. So what we're really looking for on these trades, the false breakouts, are one, a false breakout, and then a gentle pullback that isn't this volatile. And we're looking to enter after a 2 to 5 day pullback. We're looking for maybe a day or two of tight sideways action, and then the price action starts to turn back up, and that's when we want to be a buyer. And let's go for one more example here. In TTD, here we have this breakout above this obvious high, lasts for a day or two, then there's a pullback with some volatility, but then the price pushes higher and stalls and comes back in. Then we have this downtrend line break, which could serve as the buy entry with an entry over the prior day's high in that downtrend line. Take advantage of 1, 2, 3, 4, 5, 6 day pullback. As you gain experience with these setups, it's even possible to buy the touch of the 20-day EMA or a touch of the 8 with some size and then see how the price closes. Now, with this technique, you can get it way better entries, but you have to be careful that the price action doesn't slice through the moving average. And what you don't want to do is attempt to try this sort of entry when the market is selling off and you want to possibly buy stock off of a moving average. That's exactly the time you don't want to buy anything off a moving average, because generally speaking, if the market's selling off sharply, price action will just melt right through the moving average. That's when what's hitting the fan. So that's when I would completely avoid that type of an entry. I like buying more so off the 20 or 50 on a touch of those averages, because the 8's a bit closer and can be a bit more choppy, but I find that the entries off the 20 and 50 can work better on the touch. And I can't forget, we promised a bonus tip here if you stuck around. If you find yourself in a false breakout and you're frozen and you don't know what to do, go ahead and place a stop beneath the low of the breakout day right here. Sell partial size there. If there's a close below the breakout day, you might want to sell the rest there, or at least another third. And if it goes below the day that undercut the breakout day low, that's where you want to get out of the final position. Will this save you from getting stopped out sometimes and allow you to hold some size? Yes. This is just one technique. There's nothing special or great about it, but if you follow this technique all the time, you'll start to develop or start to understand what to do, and you'll be more robotic with exiting rather than emotional. Maybe holding this whole way down and then you sell it, turns back up. So the idea is to be robotic with these sells more or less, so that you still have a pretty good mindset. You're protecting your mental game. You're protecting the mental side of things so that when the price does reverse, you're able to react and re-enter. You don't want to be a head case as the price is going lower and then stop out, and then because you torture yourself on the way down, you're not in the right frame of mind to profit when it turns up and reverses higher. So that's the pro tip right there. Keep cool, sell partial size on the break of the low of the breakout day. Sell more if it closes below the breakout day low. Maybe sell it all, or maybe leave a little 1/3 position on and then sell that beneath the low of the day that closes below the breakout day. All right, market warriors, let's cement these false breakout profit secrets in your mind. Failed breakouts aren't failures, they're profit opportunities in disguise. Wait for the proper entry point, wait for the price action to pause at the moving average, stall, and then push higher. Or if you have enough experience and are able to watch the market, you can buy at the moving average, though that's a little bit more difficult to pull off. Remember, there are two different types of false breakouts. We have the smaller false breakout, which is more of a 2 to 5 day thing. And then we have like the ANET false breakout, which we showed you is more of a 3 to 4 week thing. And finally, if you happen to find yourself in a false breakout, make sure that you have some plan in place so that you are more robotic with the exit and that you protect your mental capital. Remember, in the market jungle, one trader's trash is another's treasure. Master false breakouts and you'll feast while others starve. Ready to take your trading to the next level? Join the Wagner Daily Pro now. Get daily stock picks, precise plans, and access to our exclusive Swing Trader chat room for real-time strategy and education. Level up with traders who nailed the ANET setup and start your path to financial flexibility and lifestyle freedom today. To join the MTG tribe and gain access to the professional level analysis, visit MorpheusTrading.com, press the stock picks link, and sign up for the Wagner Daily Pro now. Also, make sure to comment below if you have any war stories regarding false breakouts in your trading. We'd love to hear from you. And remember, in trading, the learning never stops. Keep pushing, keep growing, and always trade with confidence. Before you go, make sure you watch these two hand-picked videos on your screen, especially the 10-week MA pullback strategy we mentioned. They're your blueprint for identifying high probability setups that most traders miss. Until then, remember to trade what you see, not what you think.